Welcome back to our podcast from the Darkhorse's mouth. Today's episode is Banking on It. Will I turn a profit before my money runs out? And our co-pilot today is Carly Garzella.
Hello.
And our guest today is Chuck Kelly.
How you doing?
And Chuck is here. He's the owner, co-founder of Lumenasa Insurance. Chuck, why don't we start by just giving us a little bit of your background, where you've been and where you're at now, and kind of where you're going.
Okay, well, everything's kind of full circle for me. I grew up in Tempe, Arizona, but I went to college in Indiana. I went to Ball State University, and I was playing football there, and my guidance counselor is the one that got me interested in insurance.
Oh,
I wasn't sure what I wanted to do, and he said, take this class. And it was Insurance 101. And I actually enjoyed it.
Mm-hmm.
So I took another class, and, next thing you know, it was part of my minor, when I graduated. So I had a business degree, minor in insurance, and got a job with State Farm right out of college.
Wow.
You're one of the few people I've met that actually went to school for insurance.
Yeah, what a nerd.
Yeah. Usually everyone else started somewhere else. I know I was in computer science IT and somehow, some way found myself into insurance. But you actually kind of went to school for that.
I did.
And then you transitioned to State Farm. And how long were you with State Farm?
Well, so I graduated in December of 1989 and started with State Farm January 1990.
Oh, wow.
1990.
Yeah,
Wow.
so you can kind of do the math.
Yeah, and how long were you with them? Like
32
years.
32 years total. So I started out in claims. I was doing fire claims or homeowners claims.
Mm-hmm.
And went on, worked, several natural disasters. First one was Hurricane Andrew. And then I did like the Oakland fires, the Malibu fires, worked tornadoes, did floods. So a lot of experience in the claims. Then I went into, I moved trying to get back to Arizona. I took a job in Tucson. So I transferred to Tucson, Arizona. I was in the casualty unit there, so I handled lawsuits, the slip and falls, the trip and falls.
I bet that was interesting.
Dog bites, wrongful deaths, all that.
So at what point did you transfer into being an agent with State Farm?
Moved up to Phoenix, and then I was in the call center, and I was in management, and from there, the ceiling seemed pretty low on what I could do, and I got passed up for, a couple of positions, so I was getting a little disenfranchised, I think is the term. So got out of corporate world and went into the agency side in 2001.
Okay, wow. And then how long because Lumenasa is an independent insurance agency now, right? So then correct. I got two questions for you. Number one, it's how long were you as a State Farm agent before?
State Farm agent from 2001 to 2022.
Okay, so 21 years.
21 years.
And then how long have you been an independent agent?
2.5.
2.5.
Yes.
Okay, so here's my next question. So State Farm is one of those companies that they've got like a kung fu death grip on their agents.
Yeah.
It's very rare that I meet an independent agent that came from State Farm. Why is that?
Well, as you can see, my extensive background with State Farm has been great. I appreciate everything that they were able to do with as far as my training and just giving me the opportunity to own my own business. But it got to a point where, it was time to move on to something different. And I know it's a lot to walk away from, but if it was something that was just going to be a lateral move, I would have just stayed.
Yeah.
So this is opportunity came up to just build something great. And we're building a national independent agency.
Okay.
And so that was, of high interest to me. And, I kind of was feeling like, my income and success was kind of capped on the captive side, where on the independent side, the sky's the limit. And now I have, true ownership. I have more options for my clients, higher commission. So
yeah,
it's kind of a no-brainer.
Yeah,
Yes.
got it.
Yeah.
I mean, what do you think it is that holds so many back? Because, often I know it's natural just when you're leaving something secure for something new. Of course, that's always scary and a challenge. But, a lot of, again, a lot of State Farm agents, it seems like even more than that.
I think it's the support that is provided.
Okay.
So there's a trade,
Yeah.
right? There's a trade, and there's a comfort level. You have one of the most well-known brands, in history. You have a lot of support that they provide for you, and it's a good income.
Got
It's
it.
a good income.
But there's a bigger world out there.
Yes.
Right.
Yeah.
And how's that bigger world treating you so far? 21 years with them and 2.6
2.5.
Yeah.
or so with Lumenasa.
Well, we're getting there, but we can see what we're building is going to be pretty awesome.
Yeah.
And just for an example, my book of business was $4 million.
Okay.
Over the 21 years.
Yeah.
Yeah.
I had $4 million in premium, and we're gonna write that this year.
Wow.
Yes. Congrats.
Wow, that's awesome.
Yeah.
That's awesome.
We
That's got to
clap.
feel good. Yeah. Yeah, that's got to feel great.
Yeah. So our January was our best month, and we did $355,000 in.
Wow, congrats. Now when you were with State Farm, when you left, how many employees did you have? What was your book or your company makeup?
There was 4 people.
And now what's that makeup
Now
look like?
we have 7.
Okay.
Okay.
Yeah, we have 7. We just added 3 new advisors.
Wow, you're growing.
Yes. Yeah, we're
Good
growing.
for you.
The 3 new advisors, no experience, trained them, and they're just now getting their production up.
Okay.
So we're growing them.
It takes time, and that's actually a good segue into the the episode, which is banking on it. Am I gonna make enough money before what I have saved runs out, basically?
Yeah.
And was that a concern of yours? Like when you're making the move, is my money gonna run out?
Yes, it's always going to be a concern, but I planned on it, for over a year. I planned on it, ran different scenarios, about what could happen. I have a couple of investment properties that provide some passive income, so it allowed me to just stay focused on
Did you
building the business.
So that reminds me of kind of what I look like is like knowing your metrics. Did you do a lot of work like figuring out what your metrics are?
Oh yes, yeah.
Can you tell us a little bit about that?
So on a macro level, you really have to look at your expense ratio, right? So money coming in, what's going out, and you have to understand in the beginning, it's going to be more on the expense side, right? So
Yes.
you might be 80-20, 70-30. When we started Lumenasa, it was like scratch, like 0 clients. I brought 2 of my team members, with me, but it was, we were kind of, just a free-for-all, just trying to get started. It was drinking out of a fire hose.
Yeah.
Well, because there's a lot to learn too.
Yeah.
Yes.
Right?
Yeah, and
It's a
you're going
huge
from
learning
one carrier and one management system or pro platform to however many carriers you have and all their different platforms and their different appetites. So in the beginning, that was challenging.
Yeah, I think from a metric standpoint, the one thing I always focused on, I call it the power of 10, just to really simplify it. So if I take any 10 occurrences, and I can close, let's say I can close 3 of those, and here's the amount of revenue that generates, then how many powers of 10 do I need to increase that by in order to at least meet my expenses?
Yeah.
Right?
Yeah. And I kind of similar. I call it law of larger numbers.
Oh, yeah.
There you go.
Same thing. So, yeah, just trying to figure out, you take a small ratio and, okay, like you said, what's the multiplier on that?
Mm-hmm.
All right, I need to talk to 10 people to get 3 people that need quotes, and I close 1. All right, got it. Now, now I'm going to call 100 people.
Yes.
Right.
And get 30 quotes, and get 10 closes. Yeah, so it's kind of the same concept.
And Carly, what was that earlier? We were talking about, you were just kind of looking back on some old information.
Our agency health report.
Agency health report.
Yes.
What was the other thing you called it?
We had a
D-Day report.
I called it the D-Day report because we were doing it once a month. Actually, I think twice a month, just to see our break-even costs and where our bank account was and how many months we had left until that went dry.
Yeah.
And
so we, it was, cause you just showed it to me earlier.
Yeah.
It was a spreadsheet, and I literally would update it every month with how much money we had left in the bank account. And then I had all the employees down, the amount of premium, the amount of revenue to generate, what their goal was, and then it was what it was against the expenses and whether or not they're a profit center or a cost center. And then the amount of months that we'd have until the money ran out.
Yeah, we were done.
Mm-hmm.
And it was a good
it's very
18 months of
it's kind of very like life and death in that situation, I think. At least for me it was.
Yeah.
When you make the move like that. And did you bring any employees with you?
Yeah,
2.
I brought 2 with me.
Okay, right. So you have those 2 employees, and they're
from day one,
and they're counting on you.
Yeah.
Right.
Yeah.
And so there's no failure in moving forward.
Yeah.
Right.
So one of the advantages we had or have, we didn't start as a small business.
Okay.
Our mindset was always as a startup.
Okay.
Yeah.
So just because we're trying to build an enterprise, national agency, so I had to get that out of my mind. Like, oh, this is a small business, and no, this is a startup, and we're operating like an enterprise.
Investing
Yeah.
in the people and
So from
systems
the
and
expense side, talk to me a little bit about your first office space, what that looked like.
Well, if you look around this room, it was smaller than this. It was smaller than this. We were in the Galleria at Scottsdale.
Okay.
In just one of those spaces, and it was, you could remove one of those S's, so it was just space.
Yeah.
And I would have my meetings with people across the street at Social Tap.
Okay.
So they got to know me over there. Your office is ready. Whenever I walked in, because I just would go in the same booth all the time.
Yeah. That's funny.
Yeah. So we have some good stories, and good memories from our first space.
Yeah. Well, one of the things that always surprises me or even kills me sometimes is, our first office space was much like you described. I was basically stacking desks like they were bunk beds to fit people in there.
People as you could fit.
And I just figure look, we just need to drive revenue and keep expenses low. But I think one of the mistakes that I've seen new agents make is they feel like they have to have this glorious or this perfect office space, or everything has to be perfect. They have to have the right image, and they have to. I think a lot of it is driven, by ego a lot of times, and what it ends up doing is it ends up working against them because they got all this money invested in their office space, but they don't have the money they need for marketing,
or they can't afford to hire anybody.
Right.
To hire people to help.
Mm-hmm.
I have seen that happen a lot. You get the nice strip mall, oh, there's a Albertsons in this strip mall. There's this, there's that, there's a bank. That's great. But then, your rent's, $5,000 a month and you're not making anything.
Yes.
Yeah,
It's all going to rent.
Yeah. So then it turns into, trying to negotiate your lease, and that's, you're spending all energy on that, and you're not growing your business.
Yeah, and when you're starting off, and again, like you said, you're 80-20 to the negative, and you're in this small little office space, and you just need to scrounge for every dollar and do everything it takes. You really have to be very resourceful.
Yes.
So what are some of the things from like just a resourcefulness standpoint that that you would do?
Well, I still try to do everything I can that's free.
Yeah.
Right.
There you go. Just takes your time and energy, right?
Yeah, time and energy. And it's been proven that just referrals are the best way to grow your business. And that's just by treating people right, doing what's in their best interest, and creating that client experience for them. And they'll tell people. And they'll help you grow your business that way.
Yeah, that's awesome. And what are your thoughts on hiring people that already have had an existing license, have already had experience versus training new ones?
It's tough when you're just starting out because you don't have the resources. And someone with experience, is, it's great because it can help you. They can hit the ground running, but at the same time, your expenses immediately go up. So, if someone's making, they're wanting, well, I was making, 90,000 at this other place, they're going to want something similar,
Right.
or a compensation plan that at least gets them up to there, but you're still taking a lot of risk.
Yes.
Yeah.
Right.
Well, that's
Yeah.
that's what we found starting out, and when we built again with nothing, we invest a lot of our time, the stuff that was free, in training entry level people to the industry, because their entry level, their income expectations, like you said, are lower. And oftentimes, there's a lot of people out there that just need a shot and need an opportunity, and you can find those young entry level people and then hire them and train them. It just takes a lot of development time to get there.
It does.
But it's rewarding,
Yeah.
is it not?
Our numbers, we hired 3 new people, no experience, in September, and you can see it in our numbers. Right?
Yeah.
It's like, took a little dip,
Right.
and then it's back up now. But I mean, it's back up. I mean, we're surpassed what we were doing before.
One of the other things too that I've run into with hiring people that already have a license and have some experience, oftentimes the people that are really good at what they do, you're not getting them, right? They're already gone.
Yeah.
So you bring in a lot of people that I guess were okay at what they did. And so it seems like, we almost went through a lot of those to find, the one. Did you
The
experience
good
that?
ones.
Yeah. So right now, the 3 people that I just hired, I coach high school football.
Oh, that's cool.
Yeah, and they were kids that I used to coach. So I've known them since they were 14.
Oh,
So
I love this story.
Yeah, so I kind of knew what I was getting.
Yeah.
So I just reached back to, being resourceful, like you said, right? So reached back and gave them an opportunity, and they really appreciate it and feel like kind of changing their lives and giving them a career.
Right.
I think you mentioned on a previous episode, like once you're in,
Yeah.
you're in.
You're in.
Yeah.
You're not going
So-
anywhere.
You're not going anywhere.
Yeah.
And just to hear how far they've developed already, just from September, like they're speaking a whole different language. They're confident. They're giving advice, and people are,
They're helping
listening and they're
people.
helping. Yeah,
Yeah.
It's been great watching their development, and so that's where what we did with our new hires. But when we first started, I brought the 2 people over from my office. There was another person from a captive agent. Her agent was retiring, and so we were able to bring her over.
Okay.
So we have a mix of experience and inexperience, and the experience we're helping. Everybody's helping train.
Yeah,
Yeah.
and I think it boils down to just creating opportunities, right?
Yep.
Even in staffing, I treat staffing just like I do sales for insurance. The more opportunities that I have and that I'm able to create, the better results that I'm going to get, because you're not just, beholden to one. It's like, I remember, starting out, when you start out in insurance and you've got, one home policy to sell, you're holding on to that thing for dear life, right? But if you've got like 10 or 100 of them, well, now, you get to be a little bit more, I guess, choosy, if you will, in what you write. And I think the same goes with staffing. Like, you have to be resourceful, and it's one of the hardest things to do, is to be able to bring in enough staff consistently, find the right, the right opportunities. Like the person that you had just spoke of, who I think you said their agent was retiring, and now, because of the relationship and the resourcefulness, you identify that and you're able to pick up a good person. But without having enough opportunities there, maybe that doesn't happen so often.
And I did want to circle back a little bit when it comes to like financing and the resources. One of the things that help too is, I have a partner in it, and it's my, full disclosure.
Sure.
We're related. It's my cousin.
All
Yeah.
right.
Well, look,
That's
a lot of
family.
business. That Carly's
We're
my sister.
related.
So
Yeah.
So Mark is, we kind of ham and egg it, but he's a big help. He's in banking and finance,
That's good.
and he's still doing banking and finance.
okay.
So it's helped, our funding, while we're building this up.
Yeah.
So that's how we were able to keep things.
That's good. Yeah. So
going, too.
let's talk about that a little bit, because I know one of the things that we experienced. So our growth was, we worked tirelessly, and we still do, significant, just like yours, right? But one of the things that we ran into is, insurance. You hit a lot of singles and doubles, right?
Yeah.
A lot of singles and doubles.
We talk about that.
Yeah, it's
every day.
not like, in the mortgage industry or the real estate industry, you close $1 million loan, or you close $1 million, did I say home loan?
Yeah.
Loan home,
Or a home,
whatever it is.
yes.
And you get a big rip, right? You usually get a big rip. In insurance, you close a home, a couple of house policies, you might make
Itty bitty.
$300.
Yeah.
And then
compared
you might net, a very small percentage of that. So it's the power and the value in insurance is in the long-term residual income, as you know. But it takes a while to kind of get it up and grooving. And so what we ran into is, we're writing all this business, but in order to sustain growth and bring on people to keep growing at that level, you need money. And the money's a year, 2 years away, because the residual hits the following year, and it's that compounding residual that actually makes the business worth it, right?
Mm-hmm.
So that's where we came into the thing, like, okay, how do we finance this thing?
Yes.
Right?
Because we were, like we talked about before, we were going to try to acquire something, and that didn't pan out. So then we had to go a different route.
Yeah, and you had said that you had or your current partner is in banking and finance.
Mm-hmm.
So like one of the things we did is I just went and got a business loan, and then I think I had that structured over 5 years. It was like $3,800 a month or whatever was the payment on it, and that gave me the extra. I think it was like $175,000 to take us over the next year and a half. But then it was basically, the way I looked at it is like, I could pay it off sooner if I have the money. If I don't, I have a small payment. And so we were able to kind of manage the growth utilizing a business loan at a relatively low interest rate, because it was, I think, an SBA loan through Chase.
Yeah. It worked.
Yeah.
Here we are.
Yeah. Well, we Mark, he's uber successful. With the company he's working with now is private equity
Okay.
venture
Okay.
capital.
Okay. Wow.
Yeah.
So he was doing that, and myself, like I had some, like I said, investment income coming in. So, I went 2 years without any check or payment. So, and Mark himself, everything's just reinvested.
Yeah.
Yes.
I'm just now getting a little stipend,
Little something.
So I forgot about that because not only did we take out a business loan, but I also maxed out. I had 2 separate credit cards. I don't know what the limit was, 30,000 a piece that I maxed out.
Cashed out your 401k.
Cashed out my 401k. It was
all for us.
and it was I wasn't
All
even the
for
highest
us.
paid person in the company until year 7, I
Maybe
think.
longer than
wow,
that.
Yeah, because everything was just reinvested in. And the way that I looked at it is, I was like, okay, what's not even my lifestyle? Like, what do I need to survive? What do I need to have a little bit of fun, eat, all that type of stuff. And then that's static. And then everything else just gets reinvested back into the business because, if you keep reinvesting it in, eventually gets to this snowball effect to where, 10
You're
years
right, more
later, the
business than-
office space we have today is not the office space that we had 10 years ago.
Yes. Vastly different.
Yeah.
Not very many people would start over from scratch after building a 20-year agency.
Yeah.
Right.
No, I know.
Yeah, it's I don't recommend it for everybody.
It's not for the faint of heart.
No, it's pretty crazy dream. My friends, I know they think I'm crazy, but they're still very, supportive.
Yeah.
And I still talk all the time. My friends that they haven't kicked me out of the chat group yet.
Yeah. There you go.
So, so everybody's real supportive, and I'm not trying to flip any of them, to come over.
Right.
I just letting them know, hey, it's pretty good over here.
Right.
It's not
This
bad.
is what I do.
Yeah. So, but for the newer agents, I do think it's something that people should, consider.
Mhm.
Just because, I think it's the future of the industry. I think, especially what's been going on the last, 4 years, been a lot of disruption in the industry. Everybody's rates are going up. People are shopping, or they want options.
Right.
There's just with the parts and labor and frequency and severity going up, and companies pulling out of different states, and just everything that's going on. It's like people need true advice.
Yeah.
And that's the one thing that we offer. We consider ourselves advisors, and we want to be able to give like true advice.
Well, plus you're not biased or beholden to a single carrier.
No.
It's like when we were with farmers, we've got to fit all these different types of insurance people needs into one box, instead of putting them in the appropriate box. And so you're right. You actually can be a true consultant, not just for the insurance coverages, if you will, but also what's the best product for their needs. And I think that that's the part that really pushes the results, the exponential results that you can have as an independent agent versus, a captive agent. You get comfortable, you've got that one option, but you've got a pretty low ceiling in the grand scheme of things. And just in, listening to you talk and interviewing and talking to other agents, you're in year 2.5 and you're already past where you were.
Yeah.
And so, it's not for the faint of heart, so to speak, but if you're, I think it's the right agent, right?
Yes.
If you're an agent that you're looking, you want to make a move and you're willing to do the work, so to speak, and you're willing to kind of look like, how do I do this, and put a plan. You said you planned for a year before we did the same type of stuff. Like, it can happen, and it can happen pretty fast,
Right.
in the grand scheme of things. It doesn't seem fast, but it really is. And then you look back and you're like, wow, look at all this
Yeah.
stuff. I've got a podcast room now.
Yeah.
You know?
That's what we were just talking about
Yeah.
before we got in here is sometimes you forget all that you've done, and then you look back, and you and yourself and your agency, you'll look back and you go, holy cow, I did all that.
Yeah.
And I'm sure you had the same experience at State Farm as well.
Right now, Mark and I will look at each other and like, it's working.
Yeah.
Yeah, it's working. We're like, holy cow. Yeah. So all the things we said we were going to do, we've done. Now we're checking off, the next things that we plan on doing. We're in the process of adding a health division.
Okay.
Yeah. So, but that's always been, on the plan. It's just, okay, now we're there. Okay, first quarter 2025.
Yeah, you do individual health or group health?
Individual health, group,
Okay.
and Medicare.
Can you still make money in individual health nowadays?
Yeah.
Really? Maybe we need to look back into that. I hear Medicare a lot. That keeps coming up. We're not big into health insurance by any means, but
the Medicare is that's an interesting
a lot of moving
industry
parts there.
Yeah, but we're partnering. I've been referring my stuff to the same guy for the last 6 years.
Okay.
And he's doing pretty well.
Mm-hmm.
And we're like,
why
bring him
not?
on over.
Him in. Yeah.
Bring him on over.
Yeah, come on over.
I'm not trying to reinvent the wheel.
No.
Yeah.
But as a captive agent, I had all those products.
Right.
So now I don't have to be the head of it.
Right.
Or the go-to, we can create the different divisions.
Yeah, and you've got the flexibility to do it a lot of different ways.
Yes.
It's not just one way. There's 1,000 different ways to achieve the same goal, and it's all a little bit different, which is actually cool. That's what business is about. But yeah, you've got the flexibility to do that, which of course, as it relates to, the topic of the podcast, banking on it and basically generating enough revenue before your money runs out, you have the ability to do that.
Yeah. Yeah. So we're fortunate. Like I said, if it was just going to be a lateral, I would have just stayed. I was golfing 2-3 times a week and, coaching and doing all. Yeah. So, I think sometimes you get comfortable with whatever income you're making.
Mm-hmm.
Sometimes you get blinded by it too, and you don't want to rock the boat. You just want to, call it riding the wave. You just stay up here, like don't.
The problem with that wave is it steadily declines, and it's hard to sustain it, especially over a long term when you only have one option. Yeah. That's what I found. I was like, you know what? I was like, because all the insurance companies, they go through the same rate cycles, the same ups and downs, right? They're hot one minute, they're not. But the problem is you get to a point in the captive world where you just can't put enough power behind it to get through you cap out to get through the rate cycles. Whereas, in the independent world, you've just got the ability to, you effectively have a hedge and you can move to another carrier. Yeah. That's doing well at the moment and wants the business that the others don't.
Yeah, I see it as when you're captive, you're in a bird cage with the cover on it, mm-hmm. and you can see out, but you can just see this much. Right?
Yeah.
Then the cover comes off. Oh, you're like,
singing.
Wow. Then the door opens.
Yeah.
And you fly out, and it's like, holy cow!
Oh man, there's a world out here.
Yeah.
Yeah. So, with all my experience, 32 years, I thought I knew something, right? And then I get out, and I'm like, oh, wait a minute, this is what's going on.
It's a bit of a shock for a little bit.
I feel like I'm just an infant, mm-hmm. and I'm having fun. And sometimes it's better not to know any different, right? So I'm out here like, oh, wow, this is great. And they're like, well, be careful.
Yeah. It seems so easy when I thought of it before. And then I'm actually getting out here, have to do it. And I'm like, it's,
you run into some
then you have all this other stuff.
Mm-hmm.
Yeah. That's how it always occurs to me. I started, working towards a goal, like a new division, health and, what'd you say?
Life and health.
Life and health. I'm going to build that, and in my head, it's so simple. And then and then you get out there and start doing it. You're like, oh man, I got all this stuff to think about.
Oh yeah, yeah. Because different products have a different flow and a different, just to get things issued, and the even from commercial to the personal lines, right? It's hard to do both, right? Yeah, the commercial you see that the big premium, but it's going to take a lot of back and forth underwriting, just like
Right.
where the personal lines you can go like this,
Buying
but
right there.
yeah, if you're focusing on this other stuff's getting away.
Yeah.
The life, I mean, it can bring everything to a halt.
Right.
You're chasing people, you're trying to get signatures, you're doing.
Yeah,
They gotta
that's one of those
set up an
things where
exam.
I
It's
just rather just hire the specialist or buy it,
yeah, exactly.
Mhm.
Yeah.
Don't reinvent the wheel. Like you
No, hey, who likes to do this? Let's get them
Yes.
in here.
Yeah,
you know?
yeah,
Yes.
that's awesome.
Yeah.
So wrapping up here, anything else as it relates to goal setting, driving revenue, managing your expenses?
I think for like the new agents starting out, or if they're interested in coming on to the captive side, one of the things I kind of looked at your program and what you have to offer, and I just love the plug and play aspect
Yeah.
of it, and the training and what you can do. It's it's a really cool concept.
Yeah, we appreciate it. Well, we developed it from the standpoint of being scalable. Number
Yeah.
one, right? Because at every, at 4 million in premium is different than 10 million in premium is different than 20 million premium. You have to have a different infrastructure in place. Accounting is a big piece of that. Staffing, of course, is a big piece of that. And then there's also, you're getting out and you have to, like the bird, you said, you're flying out of the cage and you're like, oh man, what is this? Sometimes it's like, how do I fly? So I figured, for individuals that still want to make a move, but, maybe there's a lot of pieces to figure out. Why not just solve that for them?
Yeah.
And we've solved it based on
our
experience, our 10 years as a captive and our, now 10 plus years as an independent for people to plug into. So.
Yeah. Yeah. So that's exciting for you. I know you're building that out, and
Thank you.
things are working.
Yeah. We're crushing it.
Yeah.
Yes.
Our podcast room will be bigger soon.
Well, maybe you'll have me back.
Yeah.
we'd love to have you
We-
back.
We'd love to have you back. In closing, is there,
Wait. I got to know how the two of you connected. How did you guys meet?
Oh, so that's interesting.
Yeah.
So Safeco, they've got their, I don't know, let's just call it President's Council meeting or whatever. And I happen to be on it. And they have a constituents meeting with basically a bunch of agents in there talking about, what the future looks like. And so I get in the call and it's me, Chuck, a couple other people. And they're like, all right, Dan, are you ready to kick us off and lead the call? And I was like, I thought I was a participant. I was just planning on standing there and, saying, a few words, interjecting here and there. And then all of a sudden they're like, oh no, you're running it. You got to ask them questions. And so I had to real quick shift to, to a completely different
presenter.
Yeah. Presenter and mentality. I got to pull up all the documents they gave me to read before. I asked the rep. I was like, did I miss an email or something? I was pretty sure that this isn't what this isn't what I was getting into. But at any rate, Chuck was on the call, and so we talked about a bunch of future stuff and just kind of hit it off.
Yeah, we bonded over some of the comments that were made.
Yes.
So I sent him a message afterwards and said, hey, we should go to lunch. Then we went to lunch and talked for, I don't know, an hour and a half or so. And just kind of hit it off and hey, you should come on my podcast. Oh,
Yeah.
Absolutely.
That's cool.
Yeah, we greatly appreciate it. Yeah,
Yeah.
we shared the same vision and aspirations and,
Yeah, like-minded.
like-minded stuff
And you
like
guys
that.
are, so far ahead, but, what we're trying to do. We're just out here, dreaming big, and
That's what it takes.
Yeah. So, but what you guys have done in a short period of time has been amazing and kind of a an inspiration. So,
Well,
love to see everything and learning more about your other companies.
Yeah,
and
for sure.
everything. like the accounting, the quote monkey.
Yeah.
Yeah.
Oh,
all
yeah.
Our proprietary property program,
Yeah.
Avalon. Yeah, they're all
Yeah, it's pretty cool.
it's a lot of fun.
Yeah.
It's a
Yeah.
lot of fun to build, and I love to I love to mentor and help and all that type of stuff too. And I never think that I'm too good either. I'm always asking for help.
Yeah.
I mean,
Yeah.
I come to you and say, hey, how would you do this? Things like that. I think there's I think humility is important in business, right?
Definitely.
And I always think that there's there's always someone better. Yeah, that's what my father used to always tell me. He's like,
Yeah.
well, son, you
did.
think you're good. There's always someone better. I was like, well, thanks for making me feel that I'm never good
Right.
enough.
Yeah. And the thing we have in common is just building our own brand from scratch. You talk about, challenging and like Lumenasa, like, nobody's ever heard of Lumenasa, but it's it's Latin for light,
Mm-hmm.
Spanish for house. We just combine the two.
That's cool.
Oh, that's cool.
Drop the C, but but it's
Yeah.
lighthouse.
I was going to ask.
Lighthouse
ask
was
you that.
taken, right? So
Oh, gotcha. So you built
just-
it. I like that.
It's called a portmanteau,
Okay.
and Mark would be proud that I used it.
Yay.
There you
Mark.
go.
Yeah. So combining two words to make one,
Okay.
and that's what we.
A
doing.
portmanteau.
I like that
Yes.
idea.
Is that it? I won't forget that now.
I know.
I learned
Yeah.
something new. I love it.
Right.
Yeah, but so that's the fun part, just building and seeing where it goes, but putting a plan together and sticking to the plan. You make adjustments along the way, right? But it's all about execution.
Yeah, you're right.
And keep
Yes.
driving it, and that's what we're focusing on right now is executing. And myself, I'm not producing. I'm not in there writing because if I'm writing business, if I'm working in it, I can't be working on it. So I try to keep working on the business and driving it, forward, with my partner.
Yeah.
Yeah.
Well, that's always important to do, and that's always a big challenge of agents being able to pull themselves out of that production kind of mindset mentality, and then being able to hand it off and teach and train others, because ultimately you have to be willing to let them fail. You could be bringing in. There's a lot of big deals that I could have done myself, but I push off to someone else for them to do because they have to have the opportunity to learn. And I'd be willing to lose, the two big ones to get the 10 long term that they're going to be able to do through that training and development.
Yeah, yeah. So we have a couple of those, going on right now, like condo associations.
Okay, cool.
Doing the statement of value.
Oh yeah.
Yes.
And I just see the look in one of the new guys' eyes. It's like yeah, man. This
Excel
is,
Have fun.
spreadsheet.
What it
Have
takes.
fun.
Yeah.
Learn Excel.
Yeah.
yeah.
Use that a lot in insurance.
Yes.
Yeah. So that, the certificates of insurance, the accord forms, it's a lot. It's a lot to
Yeah.
learn, but that's the only way you're going to do it is hands-on, getting in there and getting after it.
Yep. And just doing it.
Digging deep.
I always say a vision without execution is just a dream. So
Yeah.
you gotta move forward and always execute.
Yes, indeed.
Yeah.
Yeah.
Awesome. Well, we appreciate having you on. We appreciate you being here with us. And anything else before we close? Any questions?
No, for the new guys out there that are thinking about doing it, I think it's a great opportunity. Do your research. There's several other companies out there that have a plan and a vision.
Yeah.
We operate a little bit different on our
For sure.
on our field agent opportunities, but like I said, I love the plan that you guys have set forth for people where they can just come in, plug and play, and get going.
Yeah. I appreciate, and we appreciate that. And there's a lot of other companies out there, and not everyone's going to fit in one bucket, and we don't expect them to. We just look for the people that it's a good fit.
Yeah, and that's what I love, your attitude and your approach to just have other agents on your show, just to discuss and support each other. There's enough out there for everybody,
There is.
kind of
Yes.
feel. But if we work together and just have that energy, we can all be successful.
Yep. And ultimately, we want to help, and that's what we're here for in whatever capacity it looks like. If you're listening, you pick up a few things that helps you move the ball forward, it gets you off the fence, and in 2.5 years from now, you can be sitting there being like, man, this was a great move. Well, then we did our part, and and great stuff happens. So.
Yes. Awesome.
All right. So back to the, before we wrap up here, back to the Ask Me Anything. We like to close out on, just, if there's any type of burning question that you have, insurance or related to myself, otherwise, what would that be?
What was your worst marketing decision?
Ooh.
Worst marketing decision?
Yeah.
Well, Carly, it wasn't the mints, but that was the first thing that came to mind.
Yeah.
We, this is way back when we were a farmer's agent. She was marketing to mortgage brokers. And she's like, we got to get these mints. We got to get these mints. So we invested in all these mints. And I think maybe like a few mints were handed out. I had like 6 boxes in my garage.
Yeah.
Yes.
I don't know if I would call that my worst marketing idea, but it is the one that came to mind.
That was really, yeah.
What I would say about marketing is there's probably been a lot of worse marketing ideas. I try a lot. I'm one of those people that, not as much now because I'm so busy, but certainly when I start, I hear everyone out. So I'd always answer the telemarketers' calls. I'd always hear them out. If I saw there was potential value in what was being brought to me, I'd try it. And I'm trying to think like if there's because there's a lot of trial and error in marketing. Mm-hmm. I'm trying to think if there was like one single thing that, I've never been a fan of internet leads.
Okay.
I know that there's a lot of people that swear by internet leads. They love them. Like for me, I dumped a lot of money into them, spun my wheels a lot, and it just never took.
It never really took for me either.
Yeah, I always found it more effective. I still find it more effective to build one-to-many marketing relationships. So I build a relationship with a mortgage office who's dealing with a lot of clients. I build one relationship, I get a lot of prospects. Same thing in associations, so I get into an association where my target market is, and I build a relationship with the association, the people in it. I get a lot of prospects. So that's always been the type of marketing that has propelled us forward exponentially. The internet market or the internet leads, that's good to get you going, right? Because you need kind of a starting point when you launch into the independent world, and that's one way to do it. But has never really been for me.
Yeah, need something to be busy, get the phones ringing, or people to call.
Yeah, because the relationship part of it takes 6 to 18 months to build. Right, you've got your warm market, and your warm market runs out, whatever that looks like eventually. You've got your past clients maybe that you're bringing over, and you'll take a percentage of those eventually. But to build those long-term relationships with the one-to-many marketing sources, those take time.
Right.
Those take time. And but while that's happening, dialing for dollars, business to business, spending your energy and spending money on internet leads because you can get activity, that kind of gets you going. So to each their own.
Yeah.
Yeah.
What's your thoughts on sponsorships?
So
buying tables, sponsoring, golf tournament.
So generally we're doing more of it now because it becomes more of a branding play and we've got a lot of revenue to spend. But starting off, I don't recommend it. And it's all about execution too. So like, for example, sponsored my son's school. That may not be a great one because I've sponsored it for 2 years now. I don't think I've got one thing from it. But the challenge is I can't be the person going to the school all the time to do it because I've got everything else going on. So it was someone's responsibility, one of our producers, to go in there and kind of manage and grow that. And of course, if they don't execute it, manage and grow it, then I just threw $2,500 in the drain. So I think it's all about execution. Like the sponsorships can be good, but you have to be involved. Like if you sponsor the school and you've got your name on the wall, it doesn't mean anything. People say it and they're like, oh, that's cool. And then they forget about it half second later. But if your name's on the wall and you're involved in the school or whatever you're sponsoring, and people know, like, and trust you, then they'll begin to do business with you. Then that branding and that sponsorship is important, but it has to be coupled with a lot of other things.
Yeah, I agree. Because when you start a new agency, you do get asked a lot, and everything's like $1,000, $1,500, $2,500, and you're not. You mentioned, taking time to build up because it's residual income.
Mm-hmm.
An old agent told me you got to pick up a lot of nickels in this business.
Well, here's the thing is you've got to be able to measure it. When you're starting out, if you can't measure it, then don't do it.
Yeah.
Like if you're going to put your name in lights for $5,000 and you can't measure that, don't do it.
Yeah. What's the return, and when's the return?
Mm-hmm.
The return might be 3 years later, but you can't put $5,000 towards something like that. And even today we're 2.5, 2.5 years in. We have to, right. What's the return on this? Before we, even down to having a table somewhere, for $500. I mean, $500 is a lot of money, right? So,
yeah.
Especially when you're starting out, so. You have to decide, is this lead generating or is this branding, right? If it's branding, how much do you really want to spend?
Yeah, and starting off, like,
can I get leads?
You've got to spend so much money on branding for it to be effective at scale. That it's not worth spending the money on branding. Starting off, what I did is I just utilized the brands of the carriers I worked with. Like Travelers has a brand and Safeco has a brand and Nationwide has a brand. So I just brand myself through them. I think that's effective as it relates to generating credibility. But as it relates to, again, sponsoring anything for any substantial amount of money, you got to ask yourself, okay, I'm going to put this here. How am I going to measure the leads that are going to come in? What's the follow-up look like? Yeah. And how am I going to monetize that follow-up? And look, try it at a smaller level. Don't go spend $10,000. I think that's crazy, especially when you're starting out. But if you were to spend $1,000 or $2,500, then okay, spend it and then see what happens. And if you can't generate a return on it, then maybe put the money into something else.
Yeah.
And I think there's no substitute for your own time and energy.
I agree. So just managing, just your centers of influence, and nurturing those relationships and building it. You have
to get involved. If you just expect to write a check and have results, then you're going to be disappointed. You have to be involved in any type of association, networking group, and not involved as you show up, but involved as, you're on the board or doing,
participating.
Yes, participating. Yeah. And it takes time to build those relationships. And again, people do business with people that they know, like, and trust. And it's typically, visibility, credibility, profitability. First, you have to be visible. Then you have to be credible. And only then, once you're both visible and credible, can you actually be profitable and make money, and that takes time. Thanks for tuning in to our podcast from the Darkhorse's mouth. You can learn more about us at darkhorseinsurance.com.
Follow us on Facebook, Instagram, and LinkedIn at Darkhorse Insurance Brokers, and email any questions to podcast@darkhorseinsurance.com. Thank you.